Welcome back to Investing Talk Podcast.
Yeah, it's great to be back. And today we're taking a look at a company that I think is fundamentally misunderstood by a lot of retail investors. We are talking about Astera Labs.
Astera Labs.
Ticker symbol ALAB.
ALB. Got it. So, usually when we talk AI on this show, everyone's just screaming about the brains of the operation, right?
Yeah.
The GPUs, the NVIDIAs of the world, even AMD. But looking at the research you brought, you're telling me we're spending our time today looking at the plumbing.
Exactly. But I want you to erase the image of like a rusty pipe under your sink. Think of this as high-speed, gold-plated, diamond-encrusted plumbing.
Okay.
Here is crucial. You can have the fastest GPU in the world, the most powerful brain, but if you can't move the data in and out of it fast enough, you have a bottleneck.
A total neck.
The brain just sits there idle. Astera Labs solves that. They provide the connectivity solutions, the smart electrical cables and switches that allow these massive AI clusters to actually function.
So if NVIDIA is the Ferrari engine, Astera is the transmission.
Even better, think of it as the entire highway infrastructure. You put a Ferrari in gridlock traffic, it goes zero.
Right.
It doesn't matter how much horsepower you have, Astera clears the traffic.
Or I like that. Without them, the Ferrari is just an expensive piece of garage art. I'm listening.
Exactly.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really does help us out.
It does.
Now, let's get into the hook here. I'm looking at the chart, and rocket ship feels like an understatement.
It really has been wild. I mean, you look back at the IPO, we were talking, what, $36 a share?
$36.
Fast forward to where we are now, February 2026, and we've seen highs breaking over 200.
Yeah.
That's a massive run in, what, less than 2 years?
But we have seen a bit of a pullback, right? We're trading around that 169 range now. So the big question is this a discount on a future giant? Or was that $200 mark a warning sign that the hype, got a little ahead of reality?
And that is exactly what we are going to unpack. And to do that, we have to start with the fundamentals. The numbers are startling, but they only make sense if you really get the tech.
Okay, let's dig in. I'm looking at the revenue trajectory first. Recent results, just over $396 million. But for the full year in the semi segment, we're hitting $723 million.
Right. But here's the number that should make you sit up straight.
Yeah.
Analysts are projecting a 42% revenue compound annual growth rate.
42%.
Over the next year.
A 42% CAGR. Most mature tech companies fight for 10%.
It's huge. And it's all driven by what we call hyperscaler adoption. This isn't selling chips for laptops. This is Amazon, Google, Microsoft.
Big guys.
The big guys. They're building out these massive data centers, and they're adopting standards called PCIe 6.0 and CXL.
Okay, stop there. You're throwing alphabet soup at me. PCIe 6.0 and CXL. Break that down for me. Why do I care?
Right. Let's do the ELI5.
Yeah.
PCIe is it's basically the standard wire that connects a chip to a motherboard. It's the highway.
Got it.
But as chips get faster,
right,
like the jump from PCIe 4 to 5 to 6, the signal going through that copper wire gets messy. It degrades. It's like shouting across a crowded room.
So the data just fades out, turns into static before it gets there.
Precisely. The physics of copper can't handle that speed over distance. So Astera builds a chip called a retimer, their Aries product.
A retimer?
Imagine a line of people shouting a message. A retimer is a person in the middle who listens, cleans up the message, amplifies it, and shouts it perfectly to the next person.
Ah, okay.
Without that, the data just arrives as garbage. Astera completely dominates the market for these shouters.
Okay, so they're signal boosters. That makes sense. And the CXL thing?
CXL is even cooler.
Yeah.
Compute Express Link. In a normal server, every CPU has its own private memory, its own RAM. So if one CPU is overloaded and needs more, it can't just borrow from the idle CPU next to it. It's just so inefficient.
It's like having a lunchbox you can't share, even if you're starving and the guy next to you has 5 sandwiches.
Exactly. CXL changes all that. It allows different processors to share a pool of memory. It turns those lunchboxes into a massive buffet table for everyone.
I see.
And Astera's Leo memory controllers, they manage that buffet. It saves these data centers millions.
So they are literally the traffic cops and the buffet managers of the data center.
That is a great way to put it, yeah.
Okay, the top line growth makes sense. Data centers are getting bigger, faster, more complex. But I'm the skeptic. What about the quality of those earnings? Usually when a hardware company grows this fast, they are just burning cash on factories.
This is where it gets really interesting. Their non-GAAP gross margins are at 75.4%.
Whoa, wait, hold on. 75% for hardware. That's software territory. How are they doing that?
It's two things. First, Astera is fabless. They don't own the factories.
Right.
They design the chips, and they let partners like TSMC deal with all the heavy capital. It keeps them incredibly lean.
Smart. Let someone else deal with the overhead.
Exactly. But the second part, the real secret sauce, is their software ecosystem. It's called Cosmos.
Cosmos sounds very sci-fi.
It is.
Yeah.
But forget the acronym. Here's the hook. When you buy an Astera chip, you don't just get silicon. You get a suite of software that lets the data center manager see exactly what's happening in the wires.
Like a diagnostic tool.
A super-powered one. Imagine you run a data center with 100,000 cables. One is failing. Without software, you're looking for a needle in a haystack.
Yeah, that's a nightmare.
With Cosmos, the system just tells you, hey, cable 4, row 12 is acting up. That visibility is worth its weight in gold to an Amazon or a Google, and that value is baked into the chip price. That's why operating margins are expanding to nearly 42%.
That is so clever. It's like the razor and blade model, but the razor is a smart chip and the blade is the software that runs everything.
You got it.
So they're lean, they're profitable, they're growing. Let's talk safety net. Can they survive a downturn?
They have what I like to call a fortress balance sheet. We are looking at over $800 million in cash and equivalents.
And debt. Any long-term debt?
Zero.
Oh, I love to hear that.
Not a dime. Their current ratio is 12.8. So for every dollar they owe in the next year, they have $12.80 ready to go.
Incredibly safe.
And because they're not servicing debt, every dollar is going right back into R&D.
No dividends or buybacks yet, I assume?
No, and they shouldn't be, not at this stage. They're pouring that cash into the switching market. Their Scorpio product line, which is a $20 billion opportunity, they are playing offense.
Okay, you mentioned the switching market. Let's pause there. Let's talk about the moat. Because if there's $20 billion on the table, Broadcom is going to show up. Marvell is going to show up.
They will.
What stops Broadcom from just crushing them? Why can't they just make a retimer?
That is the multi-billion-dollar question. And look, Broadcom and Marvell are formidable, absolutely. But Astera has a few advantages. First is just focus. Broadcom does everything. Astera only does connectivity for AI. They were first to market with PCIe 6.0. And in this industry, being first is huge because once a data center validates your chip, they hate changing it.
Right. It's risky to swap out the plumbing once the house is built.
Exactly. These qualification cycles take months. So once Astera's designed in, they're sticky. And then you go back to Cosmos.
The software.
If a data center starts using Cosmos to monitor their whole network, switching to a competitor means losing all that visibility. It creates massive switching costs.
So the software is the lock.
The software is the handcuffs, the good kind. Plus, Broadcom is like a battleship, powerful but slow to turn. Astera's a speedboat. They could just pivot their designs way faster.
It sounds like a solid foundation, but, a good company isn't always a good stock at the current price. Let's pivot to the charts and see what the price action is telling us.
This is where the story gets visual. Like we said, the stock's up 65% over the past 12 months.
Which is great if you bought a year ago. But for someone listening today, they're just seeing a chart that went vertical and then dipped.
Yeah, true. But if you look at the structure, we see a pattern of higher highs. Even with the volatility, it's making new ceilings. We surged from that IPO price. And in late January of this year, 2026, we were testing that $185 to $205 range.
And now, February 10th, we're at what, 169? That's a decent haircut. Is that a falling knife?
I don't see it that way. Technically, it's holding critical support levels. It hasn't crashed through the floor. It looks like consolidation.
A healthy breath before the next leg up.
Exactly.
Yeah.
Markets don't go up in a straight line. The trend is still bullish, even if it's choppy right now.
And the volume is holding up.
Volume is holding up. We are not seeing a massive institutional exodus.
Okay, so the charts look strong, but what's the street saying? Let's move to sentiment. Because sometimes the mood can shift before the price does.
The quantitative sentiment right now is, I'd say, neutral to bullish.
Yeah.
But there was a specific news catalyst just yesterday, February 9th, that I think is really important.
Oh, yeah.
Astera Labs announced they're expanding their global engineering operations with a new R&D center in Israel.
Israel. That's a huge hub for semiconductor talent. Right. NVIDIA and Intel are big there.
It is massive. The talent density for chip design in Israel is, arguably the highest in the world outside of Silicon Valley.
So what's the signal?
To me, this is a signal of pure confidence. You don't open a major new R&D hub in a high-cost region if you're worried about next quarter.
Yeah.
You do it if you're planning for the next 5 years of dominance.
That's a good point. It's an investment in brain power. And the analysts, are they buying this dip?
They are. We're seeing price targets consistently in the $200 plus range for 2026, outperform initiations. And the reasoning is pretty uniform. The AI chip boom is not over.
Right.
Conferences, like the one Needham just hosted, confirm the hyperscalers are pulling hard on supply. They can't get this stuff fast enough.
So customers are demanding it, analysts like it. What about the people inside the building? Do the cooks eat their own cooking?
This is one of my favorite metrics for Astera. Insider ownership is at 22.8%.
That's high.
It is very high for a public tech company this size. Usually, founders and execs are diluted down to single digits by now.
Right.
Here, management is heavily invested. Their net worth is tied to this stock going up. That aligns them perfectly with you as a shareholder, their owners.
I do like that alignment. It makes me sleep better at night. But look, we've been pretty positive. It can all be green candles. Let's look at the risks.
We have to.
Because I'm looking at one number here that makes my value investor heart skip a beat.
I think I know which number you're looking at.
The PE ratio, 72.05.
Yep, it's heavy.
That is a nosebleed valuation. I mean, you are paying $72 for every dollar of earnings. If that growth slows down even a little bit, that stock price could get cut in half overnight.
That is the primary bear case. You're absolutely right. It is priced for perfection. A PE of 72 means the market expects flawless execution.
Right.
However, you have to weigh that against the 42% growth rate. You're paying a premium, but you're buying a company that's growing earnings at nearly 30% a year. It's a growth at a reasonable price debate, just stretched to the extreme.
So you're saying the price is justified because they're sprinting, not walking.
Exactly. It's priced in. But you're right. If they miss an earnings call, the punishment will be swift. This is not a stock for the faint of heart.
And what about customer concentration? We keep saying hyperscalers. That's a fancy word for like 3 companies. If Google decides to design its own chips, which they can, Astera loses a huge chunk of business.
That is a very real risk. The concentration is high. However, designing these chips is it's really hard. It's physics. Even Google might decide it's cheaper and easier to just buy best-in-class from Astera. But yes, that reliance is a risk.
And we can't forget sector risks. We saw what happened when Intel dragged everyone down in January.
For sure. Astera doesn't exist in a vacuum. If there's a macro drag, if big tech cuts CapEx, Astera will feel it. And supply chain. They're fabless. If TSMC has a problem, Astera can't deliver.
And I've heard rumors, too. Leadership shifts, maybe automotive partnerships. If those things stall, that premium valuation could evaporate.
The speculation is always a double-edged sword. If they get into automotive, it's a huge new market. If they fail, it's a distraction. But right now, their core data center business is just so strong.
Okay, so weighing the massive growth and the strong moat against that nosebleed valuation and the concentration risk, where do we land?
When you put it all together, I am assigning Astera Labs a bullish score of 9 out of 10.
9 out of 10. That is high confidence. You're putting your neck on the line there.
I am. And here's the thesis in an elevator pitch. Astera Labs dominates the plumbing of AI connectivity with 75% plus margins. That mix of hardware dominance and software margins is so rare.
Okay.
They're capturing a $20 billion TAM with their Scorpio switches and CXL ramps.
And the money.
Financially bulletproof, debt-free, $800 million in cash. They have the resources to defend that moat and that expansion into Israel. That's offense, not defense.
So what's the time frame? A trade for next week?
No, definitely not. If you buy this for a week, you might get burned by the volatility. This is a multi-year hold. I'm looking into 2027. We want to be around for their photonics roadmap.
Light-based data transfer.
The next frontier.
Yeah.
You can hold through the chop. The fundamentals suggest this company will be significantly larger in 2 years.
It's a compelling argument. You're betting on the infrastructure of the future, not just the flashy brain.
The brain needs the nervous system. Astera is the nervous system.
I love that analogy. Well, that leads us to a final thought for all of you listening. We talked about the hardware and the software, but think about this. As AI models get exponentially larger, the bottleneck isn't computing power anymore, it's moving the data. If Astera Labs succeeds, they effectively become the toll booth operator for the entire AI economy. Every byte of data passes through their silicon. Is that a monopoly you want a piece of?
That is a powerful question.
That's the thesis. If you enjoyed this breakdown, make sure to subscribe, like, and comment below. We'll see you in the next one.